Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. SGX Nifty is pretty okay at this point, about 1/3% higher for the SGX at 11,971. But the rest of Asia, not so lucky. Today's session is seeing a dip of about more than 1% for the Nikkei 225. Shanghai and Hang Seng also trading with cuts of about 0.5%. Good morning, Neeraj. A lot of moving parts. On a macro front, you've got the GDP numbers to deal with. You've got the termination of the developing nation status. And on the micro front, you've got the auto sales numbers, which have dipped. And then you've got the monetary policy coming up on Thursday.
Yeah, arguably the most important thing, but the SGX Nifty, Devina, still showing an uptick, which is pretty interesting today.
Yeah, interesting. Let's see what happens as we open up for trade this morning. You might actually not even see this hold by the end of the trading session. It generally tends to, see its own move by the end of trade. But let's bring in Agam Vakil to talk a little bit more about how the first trading day of the new June series shaped up and what is the setup looking like. Agam.
Well, Devina, it was a quiet day of trade, and we eventually saw the Nifty make marginal losses. So we really didn't see too much of a movement, at least as far as the Nifty open interest is concerned. But we did see a 4% addition in the Nifty banking futures, where we did see the spot come up by around 0.5%. Now, the India Volatility Index also rose 3%, but it's still about well above the mark of 16.5. Again, that's a positive too. Moving on to your open interest change, what we're looking at is a little more writing around the lower level options, such as the 11,500 and the 11,700 puts, which may provide near-term sort of real support. And this is your open interest distribution for the 27th of June, where we have 11,500 on the lower end in terms of puts accumulation. And it is a very large, broad-based range that we're looking for the Nifty. Finally, moving down to your put-call ratio, that is at a neutral level of 1.2. And when it comes to stocks, keeping an eye on Berger Paints, a very strong day of trade last Friday, as was the case for Ujjivan Financial Services too. And V-Guard, of course, also saw a surge in open interest. We didn't have as much in terms of unwinding, but a case in point, we did have few such as Engineers India as well as BEML. But on the whole, it was a day of consolidation, something that we're expecting to come through today as well.
All right, Agam, thanks very much for that. So while on a monthly basis, you do have that big broad range of 11,500 to 12,500, you're actually going to see how each of these weekly expiries pan out in terms of capping the upside and giving you a bottom. But bringing in Avinash Gorakshakar, Head of Research at Joindre Capital Services. He's joining us on the show this morning. Avinash, good morning to you. A very data-heavy week in terms of digesting all the news flow that's come over the weekend, plus what's going to happen on Thursday with the RBI policy. How does one set up for all of this?
My guess is I think the markets are definitely looking forward to the credit policy, and I think expectations are that possibly the market is expecting a rate cut. I would believe that global headwinds continue to be challenging, and I think the way the GDP numbers have panned out over the previous week, I think clearly the markets would be little hesitant in moving up. I think this bounce in the SGX Nifty typically may not be sustainable, at least in the very near term, but hopefully I think markets are looking forward that financials now in the near term could be in focus, especially the PSU banks, NBFCs could also expect a little better dose of liquidity. And I think what kind of commentary comes from the RBI governor, that would be also be crucial. I think just ahead of the monsoon, I think what kind of commentary comes in, because now global headwinds, especially from crude, have actually become favorable. Crude has come down. So all said and done, I think the markets would be looking at this factor as a key factor now to drive earnings. This being a truncated week, I think clearly markets would possibly wait for Thursday what finally comes out, and then possibly we could see a uptick from there on.
It'll be interesting to see volumes are a bit slow in today and tomorrow's session. So that is one thing to monitor. But in today's session, arguably autos will be the most important talking point. And we were just talking about it, Avinash, earlier. Let's dissect them one by one before we get to our research team huddle. Maruti and the numbers that they have come out. What happens to the stock now?
No, in fact, Neeraj, clearly, the management has gone on record mentioning that till July, I think there is going to be no respite. So I think the markets were possibly factoring in this kind of poor number. If you talk about Maruti or for
so you
that
don't
reason,
expect a further dip in this stock?
I wouldn't be surprised. I think the markets are definitely not going to take it as a complete negative surprise. This was anticipated. So clearly, I think maybe you could see a small dip in, a Maruti or maybe a two-wheeler stock like Eicher Motors, which again has shown a negative, volume growth. I would believe that markets would obviously look at the fact that post-monsoon, once volumes pick up, there could be some sort of recovery. I think clearly what the budget also provides is going to be quite critical. But overall, I would believe that except for a marginal dip, I won't be surprised that at best, it could be a market performer. I wouldn't believe that there could be some panic sell-off, Neeraj, considering that, June, July is also equally going to be equally challenging. So first quarter of most of the auto companies is going to be dry. The same could possibly have a rub-off effect on most of the large auto vendor companies, which typically cater to the Maruti and the four-wheeler and the two-wheeler pack.
Okay, the one lone shining star was Hero MotoCorp.
Yeah.
Is it a flash in the pan, or is this number encouraging enough for you to go out and buy Hero MotoCorp? Everybody talks about buying auto now. Is Hero MotoCorp the stock to buy?
I think, Neeraj, you need to buy these stocks as a contra bet, because clearly if you see the kind of balance sheets these companies enjoy, a very strong moat, a very strong balance sheet. So I think, clearly if one were to look at the medium to long term picture, I think auto definitely comes in the discretionary and the consumption kind of theme. So I would believe that if one has a long-term view, I think this could possibly be a contra bet, and definitely look at stocks like Maruti or Hero MotoCorp. I think these have definitely some decent risk rewards, provided the investor can keep a slightly longer time window.
I think that'll be interesting, right? All through, we've spoken to so many people, and they say that during demonetization as well, it seemed that it'll never come back, and those valuations sink to those levels, and then the stocks only tend to do well. When the liquidity situation eases off, and if growth were to come back, will the stock stay at these levels? That's the question that you've got to ask yourself, right?
Yeah, I mean, also in the very near term, like Yathin was also saying, it's the monsoons that's going to really play out.
That too, yeah.
Already we're seeing a delayed monsoon. We're talking about 96% to, normal monsoon. And let's see whether or not that plays a big factor in determining where these stocks go.
In the near term, for sure, yeah.
All right, we'll talk about many more stocks with Avinash as well as our technical experts when they join us. But in the meantime, let's go across to our research team, because there are these other stocks also that are there making news that could see some stock reactions early in the morning, as well as what's happening to those crude oil related sectors now that we've seen that correction in crude oil prices. Let's start off with Mishika first on some stocks news.
Yes, so airline stocks are in focus as IOCL cuts ATF prices for the first time in the last 5 months. The Pan-India prices are cut by 0.3% compared to last month to rupees 66,611 per kiloliter for June 2019. Then we have Coal India. The production in the month of May drops 1.1% to 47 million tons. Also, sales in the month of May drops 1.4% to 52 million tons. NCLT has sanctioned the merger of Indus Towers with Bharti Infratel. Great Eastern Shipping will do a buyback of 33 lakh equity shares at a price of 306 rupees per share, which is a 9% premium to the current market price. Then earnings of Quality came in, which were extremely weak. Their revenues were down 93% at 114 crores. Net loss was at 497 crores versus a net profit of 1 crore. And EBITDA loss stands at 451 crores versus 452 crores, EBITDA profit of 137 crores. And there was other expenses of 452 crores in the current quarter due to provisions for doubtful debtors and write-off for assets. The auditors state that the current financial conditions may indicate the existence of a material uncertainty of the company's ability to continue as a going concern, and therefore the company may be unable to realize its assets and discharge its liabilities in the normal course of business. And lastly, we have NBCC. They received a total business of 25 crore rupees in the month of May 2019.
All right, Mishka, thanks very much for that. So, Amit, 13% drop in 4 sessions for crude oil. How does that impact all of these sectors related to crude?
Well, a host of companies that would be impacted because of this move, starting off with the oil marketing companies. Now, for them, it's a neutral move because this fall in crude prices will give them some headroom to increase their gross marketing margin, but this sharp drop could also result into inventory losses for the oil marketing companies. Now, for the upstream companies like ONGC and Oil India, it is negative as they are the producers, and a lower prices would result into lower revenues for them. For airline companies, it is a big positive as fuel cost accounts for nearly 30 to 35% of the total cost, and this drop will aid their margins. margins. Now there are other sectors that would be positively impacted, which include the likes of lubricant manufacturers like Castrol India and Gulf Oil Lubricants. Then there is paint companies like Asian Paints, Berger, Kansai Nerolac, tire companies like MRF, Seat and Apollo. Now for these companies, crude and crude derivatives are one of the major raw materials, and this fall could probably boost their margins in the first quarter of financial year 2020 only if these falls sustains, because there's a lag, because the impact of this will come with a lag, and if there's and if this lower prices sustain, then these companies would be positively boosted. Secondly, we also have cement companies. Now they could also see a positive move, because if you see, nearly 40 to 50% of the total cost of a cement company is directly or indirectly related to crude. So this drop in crude prices could also boost the margins of cement companies in the first quarter of FY20 if this move sustains for a longer period of time.
All right. Thanks, Amit, for that. Some brokerage calls this morning, Aga?
Yes, well, we're at the end of the results season, so we had a few brokerages out there. Well, tell us about what they can expect from here on as far as the outlook goes. So Deutsche Bank, when it comes to the Q4 earnings, and based on the Q4 earnings, they are suggesting that there could be very well be a 29% increase in betterment in terms of the Nifty earnings. And if you remove the financials, we could still see a 14% growth when it comes to earnings for this particular financial year. And they're saying that there has been an increase in sectors such as energy and utilities. Companies that are likely to see higher earnings going forward will be Bhatia, UPL, SBI, Ultratech Cement and ICICI Bank. We also have Citi on Indian equity strategy, where they have suggested that they expect banks and auto to turn around. And auto, of course, in being a little bit of a surprise considering the kind of numbers that we're seeing right now. They're saying valuations are expensive amidst a macroeconomic slowdown, and there could be some earnings downgrade risks. But well, looking ahead, they are expecting some positivity, and India may continue to remain relatively in terms of preferences when it comes to FIs in emerging markets in the near term. On the whole, both brokerages relatively positive on Indian markets for now.
All right, guys, thanks a lot for that. So those are quite a few stocks that we can watch out for as we open up for trade this morning. Avinash, come to you and some of these oil and gas related stocks now that we've seen the big plunge in crude oil prices over the last 4 sessions.
I think clearly oil marketing companies should do well. I think considering the fact that crude prices have corrected sharply, you could possibly see a lot of price action on the upside, especially in oil marketing companies like maybe a BPCL, HPCL and IOC. I think clearly we could see GRMs improving in the coming quarters, hopefully, if these levels are sustained. Even from the larger oil names, from the private sector names like Reliance. I think Reliance has also corrected quite significantly, and hopefully I think in the coming 1 or 2 quarters we could see the oil business again recovering. So I think this is definitely good news, apart from the fact that ancillary names which actually consume a lot of petro-based inputs, I think could also see a decent bounce, especially companies which operate in the paints and the specialty chemical space. So I think you could see a lot of improvement in the coming quarters, hopefully, if these prices stabilize.
Fundamentally, Berger Paints, Avinash, the numbers were okay, but the stock's been rather active the last few days. This crude cool off, though the company has always said that an uptick or a downtick doesn't materially impact in the next 3 to 6 odd months. It only impacts with a bit of a lag. Would you go out and invest in a Berger Paints?
I think, Neeraj, if you have a long-term view on the consumption theme, I think paints have always been a B2C kind of business. And I think Berger Paints, Asian Paints definitely, on declines, would definitely qualify as a good portfolio bet. And I think, as you mentioned, these are products where the pricing power is pretty decent. So for a quarter or two, maybe the margins may come under pressure. But looking at the fact that, the coming budget could give us decent boost to housing and infra, I think you could possibly see a lot of action in these stocks in the coming few months as well as in the near term. Okay.
Well, let's wait and watch what happens to some of these companies. We'll also be watching out for some of these urban consumption names. Well, the conversation is about how urban consumption is coming off to look at Inox Leisure and PVR, look at Chalet Hotels. They're soaring. So somehow for select pockets, business travel, exhibition companies, the going is really, really good.
Their content pipeline,
which is looking very strong for the theatre companies.
You've still not got Avengers playing out for this quarter. They start reporting Q1 of FY20, and the Avengers Endgame revenues will start kicking in then.
Then, yeah, and actually that was a big weekend for these companies, or maybe even now. I hear a lot of people saying that they're going for the third shows right now, and then there's some Salman Khan and X-Men movie coming out as well. So pretty interesting. Actually, Avinash, before we get to our techies, a quick one: Inox and PVR.
No, I think clearly the the movie pipeline is very strong, and as you mentioned, there's a Salman movie in this week, Bharat. So I think that is going to be a big grosser, at least more for most of the exhibition companies. So I think you'll probably see a lot of short-term uptake as well as near-term numbers. Q1 numbers are definitely going to reflect Avengers, and obviously if the movie pipeline continues to be strong, these are pockets of opportunity where not much of competition has come up, and I think they have a geographical spread, and the moat considerably is quite richer. So markets are probably looking at sustainability and the movie content pipeline, which I think in the near term looks pretty solid.
Okay. Some of those movie exhibitors, watch out for them. Let's bring in our technical experts then to talk a little bit more about what kind of trades can one take. Brijesh Bhatia, Head of Research at Dealmoney Securities, is joining us on the show. Along with him, Aditya Agarwal, Technical Research Analyst at Yes Securities, is also here with us in the studios. I'll start off with you, Aditya. What are you going to do on the index today?
So I'll closely watch out for 11,970 on the upside. SGX is pointing towards a gap up opening for our markets, but it is to be seen whether it sustains or not, because Friday, as we all know, was an extremely volatile day, which we've seen that a sharp downtick and then a sharp recovery, especially Nifty did see a good sharp recovery from the lows. So on the upside, 11,970 is the zone. I'll closely watch out markets opening somewhere around those areas. If it manages to sustain above 11,970, then it will inch again back to 12,040 to about 12,035. Mind you, index has made a double top on Friday. The previous high on the election result day was 12,040, and again on Friday Nifty made a high of 12,040. So we are looking at a double top on Nifty as of now. If it crosses that, then definitely we are looking at much higher levels of 12,200 on the upside. On the downside, again, 11,800 is acting as a strong support zone. 11,800 to about 11,830, that is the zone that's acting as a strong support. More or less, it's still locked in that range of 12,040 on the upside, 11,800, 830 on the downside. For the day, I'll trade only above 11,970, a long trade for targets of 12,040.
Right. Brijesh, what are you doing?
I would slightly look for a short opportunity because if you look at the Thursday and Friday session, we are witnessing some short-term exhaustion on the Nifty hourly charts. Plus, if we look at the Friday session, it has made nearly, as Aditya has pointed out, double top formation. Plus, if you look at the RSI, there is a negative divergence showing on short-term as well as the daily charts. So I would slightly look for a short opportunity between 11,985, 12,000 levels. Let it the SGX is slightly showing positive upside. Let it move towards 11,985, 12,000 levels. Look for short opportunity, keeping a stop loss of 12,059. And I think this is being the truncated week. Already global markets are slightly down on Friday's session, and also futures are slightly pointing out to on the negative side. So I would look for a target of around 11,880. This could be purely a momentum-based trade, but I think for trend reversal on a positional side, 11,800 is a very crucial for major trend reversal. But on short-term momentum side, I'm looking for short opportunity for 11,880.
Okay. Let's watch out for those index calls. Clearly looking for short opportunities. Both are experts, so vary about upsides. What about specific stocks? Brijesh, I'll come to you first. Your stock-specific recommendations for the morning.
So with the Nifty short, I would also start with the short trade on Wockhardt Pharma. So if you look at the momentum, stock has managed to cross 400 but face the resistance at around 200 days average, and back to weekly close below 400 at around 390. So if you look at the momentum also, it's showing slightly negative, Pharma being the underperformer. I think this is a good short opportunity on Wockhardt Pharma. Futures is trading at around 393. Go for short on futures around 393, keeping a stop loss of 405.50, and the target on the downside I'm expecting around 366. Second bet would be on the buy side. We have already seen large cap ITs being gaining a strong momentum, Infosys, TCS. I think now it's time to move on to mid cap IT as well. In the last week we have seen Hexaware showing a good upside momentum, the spike from around 340.45 to around 370 level, back to around 360 level. So one can look for long opportunity around 358, 360 zone, keeping a target of around 386, and stop loss would be around 348.
Aditya?
So I'm recommending more of mid-cap space because clearly money is moving from large cap to mid-cap, small cap space. And one definitely, as Brijesh pointed out, mid-cap IT is showing some signs of a recovery and strength and buying also. So OFSS is a buy recommendation from my side at current levels of 3,400. for targets of 35.50. One can place a stop somewhere around 33.45. Again, mid-cap NBFC is looking strong, and there has been one sector which has been looking, money is flowing there. So G1 Finance is other stock. It has broken out after long consolidation from a ascending triangle pattern backed by extremely healthy volumes. So their targets will be 375. One can place a stop at 350.
Okay, so do watch out for those stocks, and a big move in Ujjivan. I think a couple of things that have happened for that stock, aside of course, the new CEO. I think Sachin Bansal of Flipkart has joined in as a director on the board as well. So interesting things happening in that company. Let's wait and watch. 6.5% uptick that happened in Friday's session. On to our special segment, Bloomberg Edge now, where Yash Upadhyay tells us about a pattern that the terminal has thrown up on a stock. Yash, good morning. What's the stock on your radar today?
Morning, Neeraj. So metal stocks are some of the biggest casualties of the trade war concerns that are there, and Hindalco being one of them is looking weak on the charts, and the fear and greed indicator, which is a proprietary Bloomberg indicator, that is suggesting a continuation of the downtrend for the stock. Whereas we do always, let's first try and understand what is the fear and greed indicator and how do you interpret it. Like I mentioned, it's a proprietary Bloomberg indicator, and it uses the spread between the two weighted moving averages of the true range. It oscillates on a zero basis line, so a value in positive would flip the fear and greed indicator into the positive territory, which means a buy, and when it goes from zero to a minus figure and turns to red, it indicates a sell signal. In the case of Hindalco, we saw that the stock has come off from the mark of about 220 or odd so to about 190. It gave a trading bounce from those levels to about 200 plus, close to 210 is where this high was there, and then again for the last 3 trading sessions it has been falling again. The lower panel, on account of the trading bounce, flipped its color from red to green for a very short duration, but after forming 3 black crows on the charts, which is the 3 consecutive red bars that we have seen that the fear and greed indicator has yet again turned from green to red, which indicates that the momentum on the downside continues to be there, and the weakness will continue forward.
Okay, and how well has this worked in the past for Hindalco, Yash?
So Neeraj, 4 out of the last 8 times that the fear and greed indicator has turned from green to red, the stock has managed to fall as much as 7.1% over the next 1 month period. Okay, 50% hit ratio, but when it does, it moves a lot. Yash, thanks so much for putting that into perspective. Let's wait and watch what happens to the metal names. There's a global factor at play out here too. Let's see what it does to some of these companies in the metal space. Friday was a slightly weak day for these names as well. Avinash, coming on these, fundamentally, technically it looks weak, but Hindalco, Vedanta, maybe some of the steel companies.
No, I think clearly, considering the fact that tariffs have gone up, and now with the kind of ongoing kind of headwinds, especially from the US-China trade war, I would believe that metals is going to be a space which is going to remain under pressure. I would believe the companies which are both on the ferrous as well as on the non-ferrous side, considering a Vedanta or maybe a Tata Steel or typically even a Hindalco, I think one could like to see what kind of numbers pan out, Neeraj, for the next 1 or 2 quarters. Metal prices have eased off, and I think hopefully if this trade war effect increases, then you're going to see obviously a lot of flows moving from metals to some other sector where possibly the risk reward could be much better compared to metals.
The other one is also NMDC. Now that we've seen global iron ore prices crossing $100 per ton, and the fact that you're seeing some amount of production cuts as well coming in from China, particularly the inventory levels have dropped. How would that impact in NMDC? They've also taken price hikes.
Yeah, they have taken price hikes. I think clearly, specific pockets within the metal pack would do well. I think hopefully on the back of increased iron ore prices. But I think clearly, at the end of the day, I mean, if end user sectors like automobiles or auto ancillaries definitely continue to show lackluster volume growth, one may not be able to see a sustenance in the rally of these companies, considering the fact that the end user sector is going to suffer. And obviously, infrastructure is one area where possibly one would have to wait for the budget. But overall, I think it's going to be a slow and steady rise. I would not be surprised that despite the fact that prices have increased, one may not see a runaway rally in this stock.
Okay. Last week was particularly good for the entire IT pocket. So the IT index itself was up, I think, more than 4%, while the benchmark index rose closer to 0.75%. So that pocket saw much of the money flowing in. Aditya, what would you do with stocks like Tech Mahindra, TCS? Tech Mahindra now at 760 was the top gainer on Friday.
So definitely TCS has outperformed these three names, Tech Mahindra, Infosys, and TCS has outperformed. It was up about 7.5% last week. Tech Mahindra definitely looks strong on the charts. As of now, it has recovered from the lows of 730, 740. A sustained trade above probably 770, 765 zone, that happens to be the immediate resistance. I'm looking for a northward target of 810 on the upside. One can place a stop somewhere around 750.
Also in focus will be oil marketing companies in the back of the sharp decline in crude oil prices. What happens, Brijesh, to an IOC, HP, BPCL?
I think best bet for would be the VPCL. I think still a good upside left towards 434, 436 levels. So every dip to around 403, 405 could be a good buying level for me, keeping a stop loss of 396, 397 on the downside. And I think 432, 435 is the upside levels I'm looking on VPCL.
Okay, well, the other one which has done remarkably well in the last few days is Astral Poly. That stock is trading at new highs, 1325, big day in Friday's session too, but 1 month returns of about 11 or 12 odd %. The numbers were okay, Avinash. The management though said that maybe post Q1 things could show an improvement. They're sanguine about the volume growth numbers as well, and they believe if the construction activity picks up, then the adhesives business could also do well. What's your sense here? It is a quality name, but it is not cheap, and growth has been kind of iffy the last couple of quarters.
No, I think Neeraj, clearly within the CPVC segment they continue to be leaders, and I think clearly the markets as well as most of the analyst community is looking forward that possibly irrigation and rural related announcements could possibly propel further demand for the company. I think they have been now changing their business model. They have been looking at products similar to what Pidilite does, and I think that is where the opportunity is. I would believe that somebody who's looking at this company should take a 2-year view, because valuations are not cheap. Clearly based on 1 year forward numbers, the stock doesn't appear cheap at all, and despite the fact that quality continues to be solid, I would believe that clearly from an earnings perspective, I think only beyond say FY20 one could expect a decent earnings growth trajectory. So at these levels, at best it could be a market performer, and I think clearly markets are definitely looking forward for numbers beyond FY20. So it's going to be a long term story. In the short term, maybe the stock may just be a market performer.
All right, we spoke on the auto pack on a fundamental basis, but if at all there's a trading idea there, Aditya, between a Maruti, Eicher Motors, Hero MotoCorp, what would you do?
Maruti will be an avoid for the time being. It's locked in that
No,
range.
my point is, so I don't know if Devina's question was that too, but let's assume it starts 1% lower. Would you go out and short it?
No, I wouldn't go ahead and short, because it's standing at a strong support zone of 6,500 to 6,400, and that has been going on for months now. So until and unless that 6,400 level is broken on the downside, I won't go short. Rather, on the contrary, if the stock manages to hold on to 6,500, I could rather look to take a long, because the negatives are already priced into the stock. If it manages to sustain around 6,500 or 6,700 zone, I would look to take a long bet for upside targets of 74, 7,500.
And that's where it usually takes support and then heads up to about 72, 7,300. From there it comes back down again. So it's a very clear range that Maruti makes.
Exactly. So it's been trading in that narrow band. Coming back to either Eicher Motor or a Hero MotoCorp, probably Bajaj Auto looks better fit as compared to Hero Moto or Eicher Motors. It's standing close to its support zone of about 2,900 to about 2,800. That is the support zone for the stock. Around these areas, one can look to accumulate the stock for upside targets of 31, 35, 3,200.
Okay, do watch out. We'll be talking extensively to the management of Maruti Suzuki a bit later on. I think this is arguably one of the most important conversations across everything today at 9:45. Do watch, and I mean the question to ask him really would be whether he believes that this slowdown could come to reversing itself in the second half, and would there be factors like the liquidity which will play a big part there, or would it be a natural course correction that will happen? I think that will be a really important conversation to have in the session today. So let's wait and watch what happens to Maruti Suzuki. IT was holding out well, Devina, in Friday's session, though with the
week was not. The week was good for IT.
Okay, yeah, the week two was good. But if crude, with the way it is corrected, brings about some bit of an impact on the rupee, it'll be very interesting what the rupee does today as well, because the macro has not been good, but crude has been positive. If the rupee were to appreciate a bit, what does that do to IT stocks in the session today? I think that will be the other important thing.
All right, 10 seconds left to go for market pre-open, so let's keep it to that. The SGX Nifty is still holding on to gains of about 1/3%, so quite a divergent move to what the rest of Asia has been doing. But remember, through the day, obviously, you will see it chart a course of its own. Nifty 50 there, opening positive. 59 odd points, very volatile swings early in the morning, so wait for a few minutes to pass. Sensex there, 81 points higher, but individual counters is what takes center stage right now, so early at pre-open. That's Titan, which moves up 4%. Axis Bank moves up 4% as well. NTPC gained some ground, so 3% higher for NTPC. IOC is up 2.5%. Grasim is up 2%. ITC, which was a laggard on Friday's session, I think the stock was down closer to 2.5% to 3%. That stock moves higher in today's session as well. So Hero MotoCorp 1.5% higher, probably the only standout in terms of the auto sales numbers, and the market is quick to reward, at least at pre-open. Hindalco, we just spoke about that one with Yash on Bloomberg Edge. The stocks open positive though, 1.4% higher. Tech Mahindra, L&T 1575. Cipla and Coal India do okay for themselves as well. More gains than losses, but with regards to some of the losers on the Nifty 50, just Maruti Suzuki, that's a sharp dip that's come in. But again, wait for some consolidation. It's a 10%, initial 10% drop that you're seeing. Tata Motors, another 10%. Eicher is down closer to 1% right now. So auto is going to take center stage. M&M is down marginally. Talking about the currency, that actually strengthens a bit more now that we've seen some big cool off in crude oil prices. 69.42, and the bond yields that were also trading multi-month lows have dipped further.
No, I think this was the closing level of yesterday's session. I don't think we have the updated yields as yet. Let's wait and watch.
Correct, because it's down 1.5%. Yeah. So you'll wait for those updated levels. But nonetheless, it's still very soft in terms of the bond yields. And ahead of the RBI policy, I mean, this is probably indicative of...
Yeah, maybe the market is pricing that in, and it'll be interesting to see in today's session if the yields slip below the 7 mark as well. So that's the key thing. Just two stocks. I don't want wait for the pre-open to settle. But ICICI Prudential, it was all over the place. There was some news report in one of the media houses about a large global investor looking to buy some stake here. Typically when such news came about in Kotak Bank, and then it went all kaput. So don't quite know how to play these news bits. Please be careful before you go out and buy a stock because you believe that a large global investor will come out and buy the stake because of some report. These things tend to take their own sweet time if they happen in the first place.
It happened with Kotak Mahindra. Nothing culminated into that.
Yeah, so just please be careful if you're trading some of these names. And lastly, and I want to ask Avinash about this as well. It's a small stock, but S. Chand and Company. It's corrected quite a bit. I think there's some development there. Unchanged as of now, but let's wait and watch what happens there. Avinash, what do you do with what's the development here? I don't think, it's is it that material from the stock price perspective? I don't know how many people own this in the first place now.
Yeah, I think Neeraj, this is a company which actually specializes in books. The famous Wren and Martin, which we used to read in schools. I think this is the publication which this company publishes. I think what is interesting is about a couple of years, about 18 odd months back, they came with an IPO of almost 600 odd rupees. So I think recently, I think some news reports say that even SDFC Mutual Funds has actually booked out a loss and exited the stock completely. So probably, I think this is definitely a further negative news flow for the stock. Already, retail investors and most of the institutional, QIB investors have also lost out money. So you could see a little bit of volatility and some sort of negative kind of, movement on the stock, considering that hardly, the company has delivered on the numbers which the management promised at the time of the IPO. And clearly, this business has been a seasonal business, not a very high ROE kind of return business. So I think the markets are punishing companies where valuations have been grossly expensive, and I think this news flow of mutual fund, exiting now the stock clearly indicates that things may not be good even going ahead.
The mood is not that great today. Still the pre-open needs to settle down, but the preliminary look at the list of gainers Indocount, McLeod Russell, JP Power, Reliance Communications, National Fertilizer, Ratan India Power. That's not a list that gives you some inspiration for early morning trade. So please keep that at the back of your mind. The one space though which seems to be doing rather well, and they already spoke about that, and that is the OMCs. So they continue to do well. That's that one good spot in the session, but otherwise it's looking slightly wobbly. We've discussed about Maruti at length on the charts. What about some of the other auto names? And Brijesh, come in on Eicher and come in on Hero MotoCorp. How do these two stocks look on the charts?
I think Eicher is turned into now a bearish territory because if you look at the other stocks name on the auto space, if you look at the Bajaj, if you look at the Hero, TVS, all has hit the range lows. Still Eicher has the cushion over there on short side. So I think 17,800 to 18,200 is the level on the downside I am eyeing on Eicher. It has to hit the fresh lows before all the negative news is been taken out. But one can look for short opportunity. 20,000 levels, 21,000 is a good stop loss one can give, and 18,000 is the level I'm eyeing on the downside on Eicher.
All right, that's on Eicher Motors. I think we've got the updated yield figures, the 10-year yields now, I think sub 7, so 6.95. And that is come off almost on a daily basis over the last 1 or 2 weeks. So we've been seeing the softness since some time now. It should be interesting to see what happens ahead of the policy now. That, we've been also seeing the short-term swap rates coming off, which probably could be an indicator that you could it's veering towards a rate cut.
Yeah, well, that probably seems to be a discounted factor. The question mark only is what's the quantum. We'll be having a very interesting conversation at 9:30 about all of this. Yeah, well, the GDP numbers predominantly, but I think with the economist from Standard Chartered Bank, Vibhuti, it'll be an interesting conversation to have at about 9:30. Anubhuti Sahay would be joining in at 9:30 a.m. to talk about that.
Avinash, come in now that we're seeing the yields drop so much. This is definitely a big boost for some of these PSU banks and the kind of treasury income that we'll see them post.
Yeah, obviously, I think this is definitely a boost for most of the PSU banks which are sitting on a large amount of treasuries, and we could see a good amount of profitability contributed from the treasury side. But I think clearly, I don't know, one aspect which needs to be factored in is the RBI has now mentioned that most of these PSU banks which have got an exposure to ILFS, they need to report that in their quarterly numbers. I don't think in the March numbers this was reported. So probably, I think that is also one factor which needs to be clearly looked at, that ILFS exposure will have to be put out. Whether it gets provided fully is not one is not aware of that. But overall, I think definitely one could see definitely some better numbers coming from the treasury side, and obviously what comes out from the ILFS side is something to watch out for.
Okay, Jyotivardhan Jaipuria, founder and CEO at Valentis Advisors, with us on the show as well. Jyoti, good having you. Let's start off with this conversation on yields. Clearly, the crude prices playing a bit of an impact out here, and the yield slipping below 6.95, playing scant regard to what the macro data has come out like, or is it actually paying heed to that? Because now with the macro and the crude and the inflation numbers, the street will start factoring in a number from the RBI which is higher than the 25 bips.
Yeah, so there are three issues. One is like oil, which has come off, but what oil is also reflecting is a slowdown in the global economy. So that's one reason it's coming off. If you see yields in Germany in the last 6 months, they've come down a lot. So global yields will start playing an impact on Indian interest rates also, because India has probably got one of the highest real interest rates in the world. And third is, as a consequence of this, now the street will keep factoring that RBI is going to cut rates, is probably going to boost liquidity, which will be, negative or whatever, positive for bonds. It will mean that yields will come down more.
Okay. The first pre-open rates, the first statements of the pre-open session are done, and as the pre-open rates settle down, we've seen the index start off looking like starting off marginally in the green. In stark contrast, mind you, to what the Asian screen was showing, in stark contrast to what the US markets did in Friday's session, and in stark contrast to what the GDP numbers are showing as well, which is a slowing number. So there's a start in the green, arguably led by crude. The question mark only is, can it last or will it correct from these levels? Jyoti, what's that sense? Are you a buyer at these levels for individual bottom-up ideas as well, or because of the heady levels and the slowing numbers that you spoke about, it might be prudent to sit on the sidelines?
So, numbers are not going to be good. Like, the March results were not very good. The June results are probably going to be worse than the March results. But what the market will start factoring in further is, like, can we get the recovery happening? Is this the bottom of the cycle? And do we get the economy moving forward? Do we get earnings moving forward from these levels? And so, generally our view or the CEO view is that we will see a earnings recovery, which will probably drive a bulk of the stock market returns. Valuations are what concern us. Valuations are expensive at this stage. So our case is probably, the next 6 months we have like a range bound market where, the markets start to consolidate. We could see corrections along the way. But probably it's like, you have to do bottom up stock ideas because the whole index per se is not going to give you that much returns.
All right.
Okay. Jyoti, stay on. So much more to talk about, but minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. The top 4 or 5 things that you should monitor in the session today. First up, auto sales continue to disappoint in May. Maruti's sales fell the most in 8 years, while Tata Motors sales fell 26% compared to the last year.
OMC is in focus as crude falls 13% in 4 sessions.
Airlines could breathe a sigh of relief after Indian Oil cuts ATF prices for the first time in 5 months.
Deutsche Bank expects earnings to rise 29% in this financial year. Citi suggests banks and auto sector to turn around in FY20.
And Castrol India is joining hands with 3M India to bring a range of vehicle care products for the automotive aftermarket. Not that it is a big reaction in the stock, but let's wait and watch. I think the one stock that we need to monitor, and that was the stock of the session in Friday's session, Avinash, Nagarjuna Construction Company. What now?
No, I think Neeraj, clearly till the time we don't get further clarity as to how existing contracts are going to be renegotiated, I think you're going to see a lackluster performance, and I think the markets would obviously look at the fact that some renegotiation happens with the government, and hopefully it will happen in the next, say, 2 to 3 months. Some renegotiation on the pricing, on the implementation. One could not expect that these contracts which have been signed by the previous government could completely be cancelled. So I think what you saw on Friday's session was a 20% drop in price and a very strong upsurge in the volumes. I think probably in the near term, the stock may remain, on the negative side. But clearly, in terms of numbers, I would believe the first quarter numbers are going to be pretty robust. They have a strong order book, and most importantly, further incremental order book is now going to be the question mark. So I would believe that until we get some clarity, Neeraj, it's better to be a little cautious here, because if at all these contracts are completely cancelled, you could further find that maybe the markets would take it quite negatively, because that order book actually does not meet anything, and it doesn't contribute to the earnings and the top line at all.
It's interesting, the sequence of events. They did not give a guidance. They themselves said that the year could be a bit patchy and consolidating of year before this news broke out. Then this news coming in, some orders cancelled, and after the 3,500 crores or thereabouts, or 35,000 or whatever the number that they have, another 10,000 odd crores worth of orders are still from the state. And while the management expressed confidence that those won't get cancelled, the street would be wary of this.
Yeah, and then they also said that they've not received any communication yet with regards to the cancellations happening. But the market had really given it a thumbs up post its earnings. And after that, you saw the stock move up closer to 10% post numbers, and then move down about 16-17% in Friday's session post this negative announcement. 97 on the stock though. Would you trade it, Aditya?
Not at all. Look at the volumes. It's like in massive surge in months. I've not seen this sort of volume, and a decline of 17%. I would completely avoid the stock.
Okay. Avinash, very quickly, 20 seconds. One stock that you're monitoring, maybe not buying right now, but keeping an eye out for.
I think we are looking at Finolex Industries. Our sense is that the next coming month post budget, I think you could see a good upsurge in most of the ancillary rural plays, and I think Finolex Industries definitely should benefit, considering that within the BJP manifesto, I think rural has been a big kind of subject which they have been speaking, and most importantly, it's a debt-free business. Clearly, last year was a difficult year for them, but looking at the integrated kind of operations, PVC and then PVC products, I would believe that hopefully crude prices come down. This is going to be a key beneficiary not only from the crude price fall, plus the fact that government spending on rural related schemes is going to increase significantly.
Okay, Avinash, we'll leave it at that. Thanks much for taking the time out and joining us today. Really appreciate your time. All right, 1 minute left for the markets to kickstart trade. Less than 1 minute actually. Brijesh, very quickly, 10 seconds. Your top idea for the day.
One can look for, apart from Wokat and the other stock we discussed, one can look for HDFC AMC long because we have seen Friday's a good momentum above 1750. So long at around 1770, keeping a stop loss of 1740, and one can look for 1830, 1840 on the upside.
Okay, we'll just take in Aditya's call post-market open, just less than 10 seconds to go for the markets to kickstart trade, and then we'll continue our conversation with Jyotivardhan Jaipuria. He's still with us, but here's how the markets are starting off this Monday morning. Well, a green, and that's a flattish start though for the Nifty Bank. I must tell you, even this is a bit of a positive surprise. Looking at the way the US market shut shop, I don't think too many people would have anticipated this, but it's not a bad start. The mid caps and the small caps should come up on your screen, and let's see what they are doing. Again, a flattish move. This is not bad. Keep that in mind. In all probability, most people would have anticipated that we'll start off in the red. Let's wait and watch if that happens during the course of the day. Bring up the heat map and show you what's moving and what's not. Keep an eye out here, of course, whether these numbers correct. But autos are not correcting too much. Maruti, in fact, less than 0.5%. So that's one standout name to monitor. Tata Motors 2% lower, Eicher 2% lower. But a lot of green, very little red, and all the oil impacted stocks are in the green. So Asian Paints, BPCL, IOC in the green. Good start there. And Hero MotoCorp, after the numbers, up about 1.7%. So it's not a bad start to the trading day at all. If you can just get the stock price of Maruti, because that is that one big number that everybody was monitoring here, and it is started off on a good footing. Maruti Suzuki is less than 1% down. Let's see if it worsens. Currently about 6812. Let's see during the course of the day if it were to correct further. Just a couple of trend makers and stocks in news that I want to highlight. The stocks which according to me should be in focus today. One of them is of course Nagarjuna Construction Company, and that one is starting off about 1.5% lower. S Chand that we were talking about, HDFC MF has booked a loss according to reports in its paper. Stock is not reacting too badly though, and HDFC AMC itself, after that big move in Friday's session, starting off just about mildly lower in trade. What about companies which are trading in and around new highs? Let's see how they are starting off. Astral Poly continues from where it left off, another 0.5% odd, but Chalet Hotels as well as Inox Leisure just seeing a bit of profit booking today. Incidentally, the Nifty Bank has now slipped into the red. Devina, what are you spotting?
VIX first off is also inching lower, I think closer to about 5% under for the India VIX, 2% lower, but this has been somewhere closer to those levels that we saw in the month of March when it had come around these levels of 15.5. 1% beverages, mid-cap index, that's your top loser in the Nifty 500. Complete washout since last week. Stock's at about 48.5 now. You've got the likes of an Aban Offshore losing a little bit more. Aurobindo is down to 2.5%. Remember, this stock had seen some amount of gains coming in last week, so some profit taking here. The likes of a Bharat Forge, 455, that's down 2.5%. Jubilant Life is down 2.33%. 483 on this one. Tata Motors DBR follows what Tata Motors is doing, that's down. Motherson Sumi looks weak in today's session. Adani Enterprises down 2%. Inox Leisure, we were just talking about, that one's down 1.8 odd percent in the session. Jet Airways at 143. First Solutions at 53. Escorts moves lower as well. The likes of a Marks and Pharma, Future Consumer, that's at 42 now, so that is also under some fair bit of pressure. Taking a look at some of the gainers then, you've got SML Isuzu, decent enough numbers, about 3% higher. Godrej Consumer 2.5% higher. HPCL from the broader market space, no longer Nifty stocks, at 2.5% higher. Apollo Hospital 2%. We've spoken about BPCL. Info Edge is the other one also, that's looking higher by about 1.5%. Dabur up 1.5%. So still a weaker start, a weaker open. Broader market breadth looking slightly weak. 725 stocks decline, 456 stocks advancing.
Aditya, your top call for the day today.
So Jeevan had opened up slightly higher. It is giving up some part of its gain, so I'll still go ahead and buy around 360, 362. Targets remain intact at 375, stop loss of a 350. Another stock to watch out very closely is Hindustan Unilever. It's running up in trade. It's just about 1.5%, almost 1.5%. Around 1804 to about 1806, it's a good buy. Accumulate the stock. Targets out here could be 1850 to about 1875 on the upside.
All right. We'll leave it at that, Aditya. Thanks so very much for joining us. Appreciate it. Jyoti, just, while we were talking about how poor the performance with regards to the volume numbers of the auto companies have been for the month of May, it looks like it was pretty much baked in because the market doesn't seem to be too worried about these numbers, and most of the stocks actually trading higher.
Yeah, the reason is we've seen these weak numbers right from, the last 6 months. So now the market is getting used to it. What the market is waiting for is probably a turn in these numbers, because one is we'll get interest rates coming down, and the second, more critically, is people are looking at liquidity infusion by the RBI, especially if they do something for the NBFCs, which gets NBFCs to start lending again. Then the expectation is that these numbers will start improving again. So that's the reason, like, the stocks have already got hurt a lot. Most of these stocks are down like 35% from the levels they were in September. So to that extent, market is now baking in negative news from them.
But Jyoti, what's your own sense? Will the cycle turn around sooner? And therefore, would you use this as an opportunity to buy into any of these? What are the kind of companies? Two-wheelers, four-wheelers, tractor companies? What would you buy?
Our preference remains for the CV cycle companies. So that's the ones we've been focusing on. And so, we've been looking at the CV companies per se, but then also what we've been looking on more is the ancillary companies which supply to the CV companies. So that's where really our focus has been.
Yeah, interesting. So the likes of Ashok Leyland, etc., in the CV space, and then the CV suppliers, Jamna Auto, for example, has come off quite rapidly. High ROC, high ROE company. I don't know if those companies would find the favor. The other way, Jyoti, is to try and take a call on what crude oil does and then make a play. I mean, it's a mug's game to really try and base your call purely on crude price movement. But if crude, even in the most constrained supply side scenario, is failing to make a break above 71, 72, it probably shows that there is very little chance in the near term of it doing that. Is that a consideration when you look at certain sectors, because the margins may get impacted positively or otherwise?
It would be useful, but what I found in all these years of investing is crude is one of the toughest things to call. And there are two reasons why crude falls. So if you look at Indian market till a few years ago, Indian market had a very positive correlation with crude, which is like when crude fell, then the markets used to fall, and when crude went up, the markets used to go up, which was, contrary to what one would think, given that high crude hurts India. Because, crude in some sense also reflects the global economy. So, some of the fall we are seeing now in crude is probably a reflection of just worries that there are recessionary conditions coming up in the developed world. And to that extent, I'm looking at crude that way as like a symbol of how people are positioned in terms of the global economy. So, it is like a mixed bag. Like if crude falls too much, it probably helps a lot of macros of India. But if that reflects that the global economy is heading closer to recession, we actually don't see markets go up. So just on sectors, I guess, I don't think like autos, I'm very excited because crude falls or something, but there are some other sectors which benefit from crude falling, like the oil marketing companies, because it just gets easier to expand marketing margins there.
All right. The other pocket, Jyoti, is the banking lot. Obviously, consensus call, we all know the private sector corporate facing banks that have garnered a lot of favor and have been outperforming. But the PSU banks now that we've been seeing, temporary, obviously shot in the arm being the treasury income that could likely go up because of the sudden drop in the yields. But do you see most of these banks coming back and reporting slightly stronger earnings on the back of the fact that you have seen front loading of provisions? You could see some bigger recoveries via IBC, and the fact that you're seeing a lot of consolidation in the same space.
Yeah, so the way we look at banks is, one is that these high quality retail banks which trade at very high price to book multiples, and then there are the corporate banks. So the corporate banks include some of the private sector banks and then the public sector banks. So we were playing the corporate banks for the last 6-8 months. Recently we've added to some public sector banks also, But the story which we've been playing is the same as the corporate banks, that the corporate banks have had a run, these banks have lagged behind, and the story is the same, that the provisioning is going to come off and IBC will help that process. So we bought some of these corporate, the public sector banks, but for us it is like, these are probably more like a 1-year trade than a 5-year trade, because there'll still be management issues there. Every time there's a change in top management in the public sector bank, provisions end up suddenly spiking again. And this whole move to consolidation is good longer term, but in the short term you don't know which bank gets hurt with a weaker bank which is merged with them. So that to some extent does worry us a bit, because it's a risk which we can't foresee and quantify today. But overall we've added a bit to public sector banks after probably a long time.
What else, Jyoti, according to you, is a good investment opportunity?
So one sector which we have been looking at, which probably is different from what everybody is focusing on, has been the capital goods space. So by capital goods I mean stuff which will gain because government will spend on infrastructure, and probably 2 years later private capex starts to pick up, because a lot of these companies have done very badly in the last 10 years. Second is they are totally underowned, nobody's been investing in them. So you're getting stuff which are at probably low end of the earnings cycle, and from here when earnings pick up, the earnings recovery could be sharp. Second is you're getting it at a time when nobody owns it, so the expectations from these companies are very low, and we are sensing that the utilization levels in these sectors is picking up, because every year there's been some volume growth in India in terms of GDP. So you have stocks where you're getting at a really low point of the cycle. We are buying them, maybe we are buying them 6 months early, but I think we can make much higher returns than the market in a capital good name, and the downside probably is quite low.
Jyoti, the point is how do you time that? Because for some time now, this whole argument about the investment cycle picking up and therefore specific capital goods stocks should be bought into, it hasn't yielded the returns that relatively some of the other investments would have yielded. Do you reckon, are you playing this with a particular time frame in mind, or are you spreading out your purchases because it's not possible to time it?
Okay, so I'm looking at it a little differently. I'm not playing it because I think the investment cycle is going to pick up, because I think the investment cycle will take still probably 2 years to pick up. So it is still some way away. So we're not buying it for that. We are buying it because in a lot of companies, what we can see is, in spite of the investment cycle not picking up, you're seeing utilization start to improve, and you're seeing operating margins start to kick in. So there are capital good companies where probably they won't have capacity 2 years later to supply. So in the next 2 years probably there'll be big operating leverage which will kick in. They'll have some pricing power, and you'll see a sharp growth in earnings coming through. And need not be very typical what you think of capital goods, but it's like roads are getting built, we know. So can we think of people who gain because roads are getting built? One way is to play the ENC company, the other is to play people who benefit from more roads getting built. Second is there's lots of stuff happening on railways. Can we do something there? Oil and gas, there's a pickup in the capex, so maybe pipeline companies are one way to play it. So it's stuff like this, because capital goods is a very vast sector. So it's not like everything will move up, but figuring out pockets where there is capex, there is very visible capex, and trying to play gainers from that.
Would you then also play the cement space?
Yeah, cement is another space which we are quite bullish on. We've got a few cement companies in our thing, because again the same thing is happening. Basically new capacities are starting to slow down, so utilization levels are going to pick up, and that will support pricing power. Also in the last 6 months what's happened is, if you see, prices have moved up, coal prices have gone down, so they're going to benefit from both sides, because you have input costs coming down, you have end product prices going up. So I think EBITDA per ton is going to see a sharp increase for these cement companies over the next couple of quarters.
Jyoti, it seems to be that you're looking to play ancillaries properly. CVs, you're looking to play them largely by the ancillary route, if I'm not wrong. this whole investment cycle or cap goods theme also looking to play via the ancillary place as well. You answered about banking, about what to do there, or how would you approach that. My question is, in banking too, would you find merit in trying to own some of the smaller names, some of the small finance banks, which are all showing some traction in the quarter gone by?
Yeah, so smaller names, yes, but what we found is probably it's easier to play in banking. Some of the bigger names than really the smaller names, because the smaller names keep getting hit by some NPL or the other. But we are trying to figure out the turn in cycle, because there are some small South Indian banks which are there where you have seen the same pressure which you've seen in any of the corporate banks. And if things start improving there, they trade at quite attractive valuations. So there are some pockets there which we are playing. We've looked at the small finance banks. We actually don't own any of them, but we are closely watching one of them, and we may be looking to enter at some point.
We've spoken about a lot of these names that fall in the mid-cap bracket. Is that the pocket where you do see some leadership coming back in?
Yeah, so my view is that over the next 1 year, the mid caps will probably do better than the large caps. There are two reasons. One is they've become relatively cheaper. 18 months back they were quite expensive. Today they are relatively cheaper than what the large caps are. Second is, if the earnings cycle starts to quicken, then probably you'll see greater traction, greater earnings delta coming through in the small cap companies. So those are the ones which will probably then perform better. Also, if you just look at history, it's been very rare to have 2 consecutive years where we've seen the mid caps underperform the large caps. So typically, if in 1 year the mid caps underperform the large caps, in the next year you see mid caps recover versus the large caps and do much better than the large caps. So just by history and performance also, we probably, this is a year which would favor the mid caps.
All right. Jyoti, we'll leave it at that. Thank you so very much for joining us this morning with your thoughts on the markets. Jyotivardhan Jaipuria there.
Thanks a lot.
Talking about what he likes going forward. We're going to take a very short break. Markets still holding on to their early morning gains, 50 odd points on the Nifty. Sensex also up closer to 200 odd points. But on the other side of the break, India's economic slowdown raises many questions. We decode those factors at play with Anubhuti Sahay of Standard Chartered Bank. And post that, Maruti Suzuki is bearing the brunt of the economic slowdown. Chairman R.C. Bhargava will be joining us to talk about the following auto sales.
RP Sanjeev Goenka Group, growing legacies.
Every once a while, there comes along a visionary who dedicates himself to transforming an entire industry. This is Ashutosh Phatak, a man who created over 4,000 ad jingles in a span of 10 years. He then co-founded Blue Frog, one of India's most iconic live music venues. The Frog created such a deep impact on the music scene that its absence is felt even today. It was more than a venue, it was a movement. And he was there for its final swan song. Restless and determined to drive change, Ashu co-founded the True School of Music that has made music a legitimate career choice and created a certified standard, India's first. This is a man who started an unseen revolution and is shaping the future of music in India. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Nirmala Sitharaman has just about 30 days to get ready and present her maiden budget. A tall ask under any circumstances, and the macro indicators are not making it easier, be it the latest GDP numbers or the US taking a more aggressive stance. The NSSO job survey isn't helping either. The government's also just about managed to come close to the revised fiscal deficit target. But that's a lot to grapple with. So is there any other factor that could provide some much needed comfort? And what do experts make of this number of GDP, which is arguably the lowest in many, many years? Let's ask all of this to Anubhuti Sahay, the South Asia Economic Research Head at Standard Chartered Bank. Anubhuti, good having you. Thanks so much for joining in. This is Neeraj here. Good morning. Is the number very, very worrying? Or do you reckon this is par for the course because of a lot of other factors, including the liquidity constraints that have hit the consumption side of the economy and will reverse in the quarters ahead? The GDP number.
Yeah, sure. So I do think that going forward, we should see an improvement from here onwards. As you very correctly said, the second half of fiscal year 19 saw too many factors playing out at the same time, which effectively weighed down on GDP growth number, with the last quarter bearing most of the brunt. But as we move forward, and I would emphasize that probably from the second quarter of fiscal year 20, we should see some improvement in numbers to come forth. And that would be first on as election-related uncertainty gets eliminated. I think that on its own can provide some respite to overall economic activity. We looked at past 9 national elections, and we have observed that most of the time GDP growth is better in 12 months post-election relative to 12 months before election. Even if you look at a whole host of proxy indicators, which we as economists follow, like odd 25 proxy indicators, almost 65% of them show a turnaround in 12 months post-election. Even if you look at investment, it bottoms out in the quarter when elections actually happen. So I think with elections behind us, with a very good mandate, there should be an improvement in economic activity, more pronouncedly from the second quarter of fiscal year 20. The second factor which should also provide some respite is the fiscal stimulus. The government announced a fiscal stimulus in the Feb budget. Only 1/3 of it was rolled out in the fiscal year 19. But this year we should get a support of around 0.6% of GDP. So that should also support primarily consumption. And last but not the least, we should see some statistical support coming in the second half of fiscal year 20. So net, when I look at the annual growth numbers, this year we printed at 6.8%. Our sense is we will move towards 7% in fiscal year 20. So there is an improvement, but it's not resounding improvement. Issues on the global front, issues in the financial sector in India pretty much remain, and they would take time to get sorted. So on growth, there should be an improvement, but I think we need to keep in mind that improvement will be a very, very gradual, or most probably we should call it a normalization rather than a sharp recovery.
The stimulus factors that you spoke about, if I can add the fix of the monetary stimulus that could come in as well. Now, what are you penciling in? Because the markets and the yields as they have started off this morning seem to suggest that the market expects maybe more than just a token 25 basis points. Will that happen? Will that be enough?
In our view, June policy rate cut is a close call. So our baseline view is that we will see a 25 basis points of rate cut. Having said that, this will be one of the first policy meetings, I think, in past 5 policy meetings when the inflation projections will be slightly higher for MPC. So this will be the first time when they will be revising it higher. So and the other issue on which the MPC might like to get some clarification on is the monsoon. So in case if they want to get some clarification on monsoon, on especially how the G20 meetings goes at the end of June, they might decide to delay it to August. Having said that, our core view is that we will get 25 basis points of rate cut in the June policy meeting. Are we looking for a much larger rate cut at this particular juncture? Our view is no. The rate cuts have to be more calibrated. The bigger change which had to be introduced in the system is already playing out pretty well, and by that I'm primarily referring to rupee liquidity in the banking system. The RBI has taken a whole host of measures, whether it is the SLR, LCR overlap, you talk about OMOs, the FX swap auctions. So liquidity has improved in the system, and from now till September, we will see liquidity staying in surplus on the back of seasonal factors, on the back of dividend transfer from the Reserve Bank of India, and also as government starts spending, which was not happening in the first few months of FY20. So I don't think there should be anything very significant on the liquidity at this particular juncture, because on its own liquidity is going into surplus. A rate cut, yes, that is something which we are expecting in the June policy meeting.
Anubhuti, good morning to you. Just comment on what's been happening with bond yields the last 3 weeks. On a weekly basis, we've been seeing easing in line with what global yields have been doing as well. What do you anticipate could be the further trajectory for yields going forward? Do you see further softening?
So, as you very correctly said, right now if you look at Indian bond yields, it's primarily following what's happening on the global front. So if you look at the US 10-year yields, it has gone down by 40 basis points, and a similar kind of a mood is pretty much reflected in a lot of bond yields in India. The other factor which is also helping Indian bonds market at this particular juncture is expectation of a rate cut, especially after the Friday GDP print, which was softer than market expectation. And last but not the least, oil prices, which is now coming towards 60. It was just above, close to 70 a few weeks back. So a lot of factors are playing in favor of bond yields at this particular juncture. Our strategy team has, on back of these factors, has put out that we can see, especially if we are talking about the 9-year IGBs, we are targeting around 6.95 to be hit. It is already trading at 6.98%, especially after the developments globally over the weekend. So that's where we think it will lie down. But once these global factors settle down, for instance, if the trade tension settle down, and in case worries on if trade tension settle down and worries on global growth should also come off, then markets in India will start focusing on domestic fundamentals, and there expectations about further rate cuts beyond what MPC might deliver on in June, expectations about liquidity situation in the banking system. So till September, liquidity can remain surplus, but come H2, it will turn into deficit again, and that is negative from the bond yield perspective. And the bigger factor would be what we can see in the upcoming budget on 5th of July. Do we see an expansionary policy, or do we see status quo as it was in the Feb 2019 policy meeting? From the bonds market perspective, global factors are supporting it at this particular juncture. But once you take that out of equation, markets are concerned about the supply-demand dynamics. And in our view, that will remain the fundamental driver once we move away from whatever has happened recently.
All right. But do you feel this has been a pretty quick move on the yields? I mean, I remember at the time when the interim budget was announced, or even at the time of state elections, we were somewhere closer to about 7.3, 7.4. And we traded probably in a band where you saw the yields come off by about 25 basis point at max. And now the move that's happened over the last 2 or 3 weeks, that's been a sharp one. Does that, how do you read into the pace at which we've seen the yields coming off?
Yes, so it has been very quick-paced, and as I said, there are a lot of factors which are right now supportive of bond yield. The most important, it started to a great extent with a very positive mandate for the next government. I think that took out a lot of uncertainty, and then the other point was related to oil prices and of course what's happening globally. If you just take a step back to 2 weeks back, we were not at that particular juncture, probably the trade tensions between US and China were not looking as elevated, were not as heightened at this particular juncture. So the movement is very quick paced, and a lot of it is to do with global factors which were missing a few weeks back, and the other part is to do with what has happened domestically, which is getting a positive election mandate. So it's quick paced for sure, but as I said, we'll have to keep a close eye on what happens on global trade tensions. If you extrapolate it, the market is actually reading global trade tensions, and they expect that it will weigh down on economic activity, especially out of China, which effectively means more accommodative monetary policy. So 2 or 3 weeks down the line, say in the G20 meeting, if we get a cold truce, even if it is a cold truce between US and China, I think some of the recent moves can get reversed. But of course, that's a big if which needs to be watched out. So from the market's perspective, I think what's happening globally, what's happening to trade tension remains extremely important, because that is the prime driver of yields at this particular juncture.
Anubhuti, just one quick last question. To your assessment, would the RBI or should the RBI inject more liquidity for the NBFC space in order to kickstart? Because a lot of private sector entrepreneurs, etc., are all getting hurt because of the lack of liquidity to the companies which need it but are not getting it.
Sure. So 2 points here. First of all, the banking system liquidity has improved a lot over past few months, and that has to some extent it has eased off pressure for good names. Second, whether a separate channel for credit line should be given to NBFC or not would primarily be decided by the RBI on the basis of the fact if whether it sees this whole issue turning into a systemic risk. As long as RBI believes that this can be sorted in a smooth manner just by a free play of market forces, I don't think they will provide a separate credit line. But in case they do see it turning into a systemic risk, then probably we can see that. For that, we will have to wait for more information coming from the RBI.
Anubhuti, so good chatting with you today. Thank you so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you.
Well, that's an economist's view on the GDP data. Well, the high frequency indicator conversation up next, Avinash.
All right, and autos that have been in focus continue to do so. Consumers choose to defer their vehicle purchases ahead of election outcome, and that's reflected on the overall auto sales numbers, more so for the country's largest car maker, Maruti Suzuki. But now that the mandate's been delivered, will the going get easier? And is it enough to spur the sales back into the system? Let's ask Maruti Suzuki's RC Bhargava, who's joining us right now on the show. He's the chairman of the company. Mr. Bhargava, thanks so very much for taking out the time and speaking with us. You previously mentioned that obviously the first half is still going to remain tough for the auto industry as a whole. But is this pain a bit too prolonged, according to you?
No, not really. The figures which you are seeing for the first 2 months of this quarter, I think what most people are not taking into account was that last year, April and May had absolutely extraordinary sales figures. If you look at those figures, they were around 170,000 a month. And 170,000 a month translates to sales of well over 2 million cars in the year, which was just not normal. So when you do this month-to-month comparison each year, what happened in the previous month last year, then you have the effect of the base. And this time the base is very high in these 2 months. Sure, the market is soft, the demand is slow, but it's not as bad as it appears from the percentage figures which you come up with year to year.
Sure, okay, get the point. But I believe from July last year, of 2018, the growth is somewhat stagnated. And in fact, start of January this year, the dip has started coming in a big way. Demand has suffered. There's been a pushback of purchases. How is the auto industry looking to tackle this?
No, but it's not unusual. In 2008, which was the year before the election, the sales were very low, I think at about 1 to 2%. The same thing happened in 2013. And this lasts for a year. These downturns are not things which happen for 2, 3, 4 months. It happens almost in every industry that there's a little bit of a cyclical phenomena which is witnessed. So it's been slow, but it's not even a year yet.
It's not a big worry for you, correct, at this point?
No, it's not a big worry at all. We are going ahead with our expansion plans. We're making our investments because we are pretty confident that the demand will come back.
When do you see that happening, though?
Our estimate is it will happen certainly by the second half of this year, maybe earlier in around August or so. Even this month, you might see that the figures are similar to what was last year. I think the decline in sales will stop probably from this month.
Mr. Bhargava, sir, good morning. Neeraj here.
Morning.
A lot of people are attributing this slowdown due to either of the two factors. One, the liquidity in the system, and two, the general slowdown with the GDP numbers having come out the way they have. You seem to suggest that it is cyclical and not a factor of these two. These are only additions to the overall cyclicality.
Well, we've certainly not had any impact from lack of liquidity. The financing of cars has not suffered on that account. The slowing down of the economy, of course, has an impact on sales. In fact, the cyclical effect is partly because the economy doesn't also keep growing steadily every month, every year. There is also dips and falls in the growth rate of the economy. And I think that reflects on the car sales.
Another thought, sir, is that people postponed their car purchases, the small car or the compact car purchases, the mini car purchases for the election verdict to be out, and then it would come back. Is that a legitimate...
Yeah. I think that seems to be what has been happening in the previous two elections and this year. I think before the election, there is generally a certain amount of anxiety and uncertainty amongst people. And they slow down their purchases, the customer demand falls, not only for cars, but I think we've seen it in many other sectors where demand has fallen off in the last few months. And I think that maybe because there's uncertainty, I don't know what other factors would influence it, but it does seem to happen.
So you are a leader of the pack. Would you reckon that the pack at large would come back in the month of June, or would it be a company-specific phenomenon largely?
I don't think June will see so much growth. It's too early. I think we have to wait to see what I think is going to happen, the big-ticket reforms from the new government, which will change sentiment, change the climate, and propel the economy on a higher growth path. But I think for those to be announced and their implications to be understood and to have a reflection in the market probably will take a couple of months.
Mr. Bhargava, since you said that you probably will see a turn in the sales numbers starting August, would that be a big function of pre-buying because of BS6?
So BS6 we've introduced two models on BS6. And so far, the customers have not had any hesitation in buying the higher cost BS6 models. In fact, our experience is that on the Alto, they are buying more of the BS6 vehicles than the BS4 vehicles. The BS4 vehicles are slow in selling.
Okay, so you don't see a higher ticket price being a deterrent to customers?
Yeah, surprisingly, that's what seems to be happening. I don't know why again, but that's happening.
All right. Mr. Bhargava, let's talk about the overall export market as well. While domestically there are various factors playing up, and you said that it's not a big concern to you. What's going to be the key export driver going forward? How do you plan to make a push on that front?
See, exports are not a major policy objective of Maruti Suzuki. And exports last year also were about 108 or 109,000 cars. I don't think it's going to go very different from that this year.
Okay. You recently said that you're probably looking at sizing down on the diesel portfolio. What's the plan there with regards to diesel cars?
See, the 1.3 liter diesel cars will discontinue at the end of this year, because our estimate is that the increase in price to convert to BS6 will make these cars unaffordable for the buyer. So we are going to discontinue it. The 1.5 liter diesel probably will be affordable, but we have to see how it works out. Diesel sales are going down. And if it appears to us that the BS6 1.5 liter engines will be affordable, people will be willing to pay the higher price, we'll come out with a model based on that.
Just to get a sense from you, Mr. Bhargava, this complete transition, to BS6 models, what kind of a cost impact will it have for your company? I mean, if you've done, the cost modeling?
It's happening. The transition is already happening. As I said, BS6 diesel will not happen. And on petrol, we have seen the price increase it varies from car to car, because along with the BS6, sometimes we have to add the safety regulations which have also come in, which mandate airbag on the driver's side, which mandates ABS, which mandates side body impact regulations. All of those are included. And that is why you'll find that the price increase varies, because some of these safety features were already incorporated earlier in many of the models. So this time, if we do, it may be only BS6 impact, which varies in the area of 6,000-8,000 rupees, something like that. But if safety measures come along, the impact can be much higher.
Okay. Mr. Bhargava, just last couple of questions from my end. On a couple of these models, with the diesel portfolio doing away, when does the Brezza petrol version come in play? And I believe the response to the new Ertiga has been pretty strong as well. Can you give us some flavor of how the different things are doing within Maruti?
The Brezza petrol, of course, will come in next year.
Okay.
But we will announce the date nearer the time of its introduction.
Okay.
And as far as the Ertiga is concerned, actually the demand has surprised us. It's much higher than what our marketing people had estimated. And the result is that actually a waiting list has built up, and we have had to take special measures to increase production capacity. We are almost doubling the production capacity for the new Ertiga. After, we have a shutdown in July, which is in June end, which is the normal shutdown for maintenance, which we have twice a year. In this shutdown, hopefully, we will make some extra investments and do some extra work, which will result in the Brezza capacity, not the Brezza, the Ertiga capacity going up substantially.
Okay. Sir, I just have one final question. A lot of these theories get floated around about how the Indian car market is still so underpenetrated because per 1,000 people there are only X cars versus what you see across the world. Isn't it chalk and cheese or apples and lemons to compare this, because the per capita buying capacity of an average Indian and the infrastructure to run these cars on is starkly different from what would happen in a Europe or a US?
Oh, absolutely. I don't think you can compare with the US and UK or Germany or someplace like that. But the infrastructure will certainly be a handicap, especially within the cities. Because unlike China, we are not going to be able to build urban infrastructure the way they did it. And that will be a limitation. But on the other hand, we have a lot of small cities which are under-penetrated. And when it comes to income, the Chinese explosion of vehicles, and China has as big a population, bigger than India, happened only when per capita incomes exceeded, I think, $3,000. And suddenly from that time, it became like a hockey stick pattern of growth. So we are waiting to see in India once we cross that level and get to $3,000 or $3,500 per capita. At that stage, we might see a surge in demand. But, these are all based on not so much the European experience, but the experience we've seen in Asian countries. Places like Thailand, Malaysia, Indonesia have a much higher density of car population than we have.
Right. Mr. Bhargava, one last question on this conversation then.
Sure.
We've been talking about how at times, and mostly because of, lack of financing from NBFCs, most people have also pushed back buying cars. The other aspect being rural income and the fact that, up trading, people who were earlier on into two-wheelers trying to move up to the lower model cars, that number getting impacted because of farm distress and because of the rural distress incomes not picking up. Do you see that changing? Because, the environment is still in a bit of a sticky spot.
I'm not sure how far this rural distress thing is a valid argument which is made by people. I don't think that there's any evidence to show that rural conditions have suddenly changed for the worse any time. And the growth in the rural areas is still substantially higher than what it is in the urban areas. And I expect that trend to continue. The driving factor, I think, is not so much the fall in income or the growth in income, but the ability to reach more customers in the rural areas. Because compared to the urban areas, the distribution and service network in rural areas is much, much thinner than it is in the urban areas. And our policy now is to expand aggressively the distribution and sales network in the rural areas. And I think that's going to keep driving the sales in the smaller towns and the villages much faster.
Okay, Mr. Bhargava, we'll leave it at that. Thank you so much, sir, for taking the time out and speaking to us at Bloomberg Quint. Well, that's an exhaustive view, not just on the May sales numbers, on specific pockets and a lot of debates that generally go on. Now, he expects June to be better than April and May and expects some bit of a pickup happening from August. I don't know if the festive season demand also kicks in by then. But the markets are flattish, but margining in the green, which is not a bad sign. We leave it on this leg of Indian Open from Devina and me and the team that put this show together. Thanks so much for watching. The FNO show takes forward the action on the other side.